Silver, the most undervalued metal in human history. Gold today is without a doubt more rare than silver. But what about tomorrow? On average today, for every 10 ounces of silver pulled out of the ground, only 1 ounce of gold is mined. However, the majority of silver mined is used for consumption, while the majority of gold mined is nearly all added to global inventory. Yet precious metal investors, as small of a group as they are still investing $7 in GLD for every $1 they invest in SLV. Looking at modern history, silver is destined to be more rare and certainly worth more than gold. In 1950, there were 10 billion ounces of above-ground available silver. By 1980, it shrank to 3.5 billion ounces. And in 2010, it is estimated that above-ground available silver supply is between 500 to 700 million ounces. To put this into perspective, total above-ground available gold in 1950 was 1 billion ounces. And today, it's estimated to be around 7 billion ounces. In 1980, when silver nearly reached $50 per ounce, global population was 2.5 billion people. Global GDP was $10 trillion, and China had the 11th largest economy. Today, global population is near 7 billion people. Global GDP, $60 trillion, and China is now the 2nd largest economy. So the population since 1980 is up 176%. Global GDP is up 500%. Above ground available gold is up 600%. Meanwhile, above ground available silver has plummeted at least by 91%, and the price is still down 46% from its 1980 high of $50 per ounce. To say the opportunity in silver is enormous is an understatement. Looking at the historical silver to gold ratio of 15 to 1, silver is highly undervalued today. It now takes 50 ounces of silver to purchase 1 ounce of gold. Even when ignoring the above ground supply deviation, mined metal production should at the very least bring that number to 10 to 1. Using today's prices with gold at $1,400, silver should be worth no less than $140 per ounce. Silver is being consumed more than ever, and it is a fact that there is less above ground available silver than there is gold. Industrial demand for silver is up 18% in just the last year. The need for silver is growing by the day. Silver is being consumed and used for bandages for wound care, batteries, brazing, soldering, catalytic converters, cell phones, computers, satellites, high-tech weaponry, lasers, digital technology, clothing, electronic circuit boards, ink, solar cells, water purification, wood treatment, antennas, RFID chips, freeway toll transponders, passports, and the list goes on. From 1990 to 2000, nearly 2 billion ounces of above-ground available silver disappeared to consumption. Yet industrial demand for silver was only 35% by the year 2000. Today, it's 54%. And looking at the new uses for silver, the silver production deficit will only widen. China, since 2003, has been growing its solar energy base by almost 100% every year. By 2014, the world will need 130 million ounces of silver just to satisfy 1 year of global solar demand. The world has consumed so much silver in the last 50 years that the last time above ground available inventory was this low was 1300 AD. The deficit of silver production has been met mostly from government stockpiles. The US has dumped nearly 5 billion ounces since World War II into the silver markets. But as of 2010, according to the USGS, government stockpile for silver are listed as none. The supply and demand deficit continues to be ignored by global investors year after year, decade after decade. Total mining production for 2009 was 710 million ounces. Total demand was 889 million ounces. That's a mining production deficit of 179 million ounces to meet demand. With each day comes a new use for silver, and the supply and demand deficit continues to eat away at the above-ground available supply. FutureMoneyTrends.com is projecting that just as palladium was once worth more than platinum, silver will one day be worth more than gold. The demand for silver will continue to increase, yet mining production will never be able to keep up, depleting the above-ground available silver supply possibly by the end of this decade. Silver may be the greatest investment in human history. How often doesn't any generation get the opportunity to invest in a finite resource that will soon be extinct?
The U.S. dollar is the kingpin in the global economy, and its continuing devaluation is destined to impact the rest of the world. If that devaluation is sudden, I suspect many people will be blindsided and panic. It could happen at any time with the right trigger. It could happen on any ordinary day on Wall Street, even a day like today. The Dow, NASDAQ, and S&P 500 are all up. Gold and silver are at all-time highs, and U.S. unemployment is officially at 11%. The U.S. dollar is in decline. The Federal Reserve prepares to do its quantitative easing trick at the Wednesday bond auction, pushing the dollar down even more. China announces they won't buy more U.S. notes until the U.S. stops devaluing its currency. The news hits the wire, and a nervous Wall Street shudders. Over the weekend, the president holds private meetings with the Federal Reserve and G20 leaders. On Sunday, the Asian markets open and go into instant meltdown in response to China's rejection of U.S. bonds. The Asian markets quickly drop 5%, then 6%, then 7%, then slip into free fall. Other currencies start to slip, and soon an avalanche of sell orders sends markets around the world spiraling down. A few hours later, Monday's opening bell at the New York Stock Exchange triggers mayhem. People dump stocks and sink everything into precious metals and commodities. In minutes, gold jumps 300 an ounce, then 400 an ounce. Silver quadruples. Everyone wants to sell, but no one has any liquidity except China and the Middle East. European countries raise interest rates by 3 or 4% to attract buyers, but there are few takers. Unprecedented competition for the remaining global liquidity forces volatile markets down even further. A half hour after the New York Stock Exchange opens, its computer circuits pop under a deluge of sell orders. Wall Street computers freeze, and trading is halted for the entire day. Tuesday morning still sees circuits jammed with sell orders, and the New York Stock Exchange is unable to open. With no buyers, the market is dead. The Federal Reserve announces a hike in U.S. interest rates to attract bond buyers and generate liquidity. Global markets don't like the hike, but stabilize somewhat, although they are still down 6 to 7% from Friday's close. Just 2 hours after the Fed's rate hike, buyers return, and the NYSE is able to open. Throughout the week, global markets take a beating before they find new support levels. But in spite of the U.S. interest rate hike, global confidence in the U.S. dollar continues to erode. Gold and silver continue to rise. Palladium hits a high. Global currencies keep falling. By the close of Friday, traders around the world are walking on eggshells and having a hard time sleeping. That weekend, the Fed meets again with the president, then announces a second interest rate hike. Currency markets instantly respond, Banks in Western Europe hike interest rates in sync with the United States. On Sunday, China has first crack at the higher yield U.S. bonds, but buyers are still scarce. By now, the public is definitely aware that something is wrong. Desperate people begin to panic, and there are a lot of desperate people. On Monday, the opening bell at the NYSE triggers a glimpse of hell. Traders around the world become net sellers of equities, bonds, and Western currencies. Everyone wants out at the same time. Panic and confusion sweep the globe, and markets are in free fall again. This time, nothing stops them. Within minutes, electronic trading systems around the world short-circuit under the load of sell orders. The NYSE shudders to a halt in what will become known as the Great Wall Street Freeze. As billions of dollars in wealth vaporize, the shock ripples throughout the international financial world. Stunned by the devastation, some traders choose oblivion. Others obsess about how to recoup their losses if and when the market reopens. Others join the rash of suicides. Others slip away quietly and are never heard from again. What can be done? World markets need a solution fast to get going again. The solution will look like nothing we've seen before. In an emergency meeting, the International Monetary Fund and G20 leaders conclude that the quickest way to jumpstart the paralyzed markets is to restructure all westernized debt in one fell swoop, set new international lending policies, and issue a global common currency. A spokeswoman for the IMF G20 coalition announces that all the global governments are aligned on a solution and have everything under control. There is no need to panic. Of course, panic sweeps the globe, and we see a massive social breakdown. Over the next 24 hours, most nations activate their police and militia to quell scared and angry rioters. People empty their ATMs and food stores, loot gun shops, and run banks into the ground. The damage to life and property becomes staggering. Just 9 days after the Great Wall Street Freeze, militia and police around the world managed to quell the riots, and governments began to tally the damage. In the United States, thousands are killed and injured, and property damage is in the many billions. 14 days following the bond auction that triggered the crash of the US dollar, every major exchange has lost vast value, and some of the smaller exchanges are completely flattened. The financial world is in shock. But elsewhere, the fisherman still fishes, and the farmer still hoes his fields, and the baker still bakes his bread. After nearly 2 weeks of intense meetings, the IMF G20 coalition hammers out the solution. They announce the formation of a temporary global unification exchange system, or GES, to oversee a restructuring of the international economy. GES issues a new coin of the realm, engraved with a unifying motto, Unus Familius Plurus, Plurus Familius Unus. One serving many, many serving one. The world now shares a common currency. Next, GES mandates that all nations immediately cease printing their money and prepare for a global currency exchange and debt reset.
Just 14 days. You know, that's a fairly short time frame for these type of changes to work their way through the global economic system. And of course, this is all conjecture, but make no mistake, we've already seen significant changes in our international economy, and more changes are on the horizon.